Hey, good morning. It's another lovely Monday morning. It's November the 30th of 2020. Name is Wheeler. Thank you guys for watching. Again, this is just a weekly update. It's kind of a recap of the weekly market update I send out, again, weekly. So every Monday, if you're not on that list, please, visit the website below or hit me in response at wheeler@exponify.com, and I'll make sure you get the weekly market update. It is pretty robust. I'm not going to lie, and some people may quit reading it halfway through. So I decided, based on again feedback, that I'll just kind of hit the highlights of what's in that report. And then if something interests you or you want to know more about it, I suggest you kind of read the complete report, dive down into the details, and then as always, just pick up the phone and call me or text me 214-842-9845. Happy to have a discussion. Again, there will be no recommendations on this on these weekly upcaps. If you're looking for that, again, if you're looking for the latest hot stock or where to put your money, I don't do that here, right? I don't give out mass recommendations. I'm not one of these shock jocks or talking news heads. Everybody has an individual portfolio. Everybody I deal with has different goals. Everybody that I deal with should invest differently, again, based on your risk profile and your goals. So that's the number one thing to think about when you're listening to these weekly updates. So I take your money very seriously, and that's the type of thing we're talking about here. So, but with that being said, let's look at a few highlights. Again, if you follow the news, another vaccine company came out. Pfizer's come out with some timetables, and that their vaccine is tracking good. We're over the 95% success rate there on the vaccine. So all of that helps the economy, if you will, or businesses more, so to speak, feel more comfortable about doing future forecasts, doing future business, making future plans. Whereas before we were all in kind of like this quagmire of, think about it, if you were a businessman or a businesswoman, how would you invest in your business now with the COVID, not knowing 1 week from the next? That's what's causing all this volatility. So the vaccine absolutely helps with calming down that volatility. I'm not saying it won't still be volatile. You're still going to see some volatility going forward, but the vaccines do help increase consumer confidence, and then also business owner confidence and CEO confidence, if you will, on how to manage their businesses going forward. Another highlight is that the Dow, the S&P, the Dow, can't talk today. The Dow eclipsed 30,000 points. Again, just as a frame of reference, it wasn't back in, I think, March that it dipped down to 18,000. And again, I had a lot of clients, I wouldn't say a lot, I had a lot asking about should we get out. Again, I think if you have a diversified portfolio back then, and if you stayed in the game, so to speak, and invested properly, that's the key. You have the proper investments. Any financial advisor can say, "Oh, stay invested. Don't get out." That's not always the case. Sometimes it makes sense to get out. 2001 was a good example of that. Some people stayed in. A lot of people stayed in when they should have gotten out. But those who listened to me and stayed in the game because we were diversified, we had the proper allocations. We were cautiously optimistic. Let's put it that way. Again, they're enjoying that. If they'd have jumped out at 18,000 sitting in cash, think where they'd be today. So again, if you were looking for a recommendation, it's that. Stay diversified. Stay with the proper asset allocation. Know what your risk tolerance is, and then make sure you're in quality investments for long term. So again, 30,000, that's great. I had a feeling we would go back up that way. I didn't know exactly when, but it's promising that we're already back up there. Some other highlights, the crude oil prices did climb. They closed at $45.53 late Friday afternoon, up from the prior $42.17. If I am looking here at the top three S&P 500 equity sector, so to speak, which sectors did the best. Information technology was up 35.2%. Shocker there, right? Technology is doing really well. Consumer discretionary was up 30.9%. Consumer discretionary being the holiday season, that's a good sign. People are spending money. And then communication services are up 20%. Now, those are the top three. The bottom three sectors, energy was down 32.9%. Looking here, financials were down just a little bit, 5.7, and then real estate took a little bit of a hit at 2.8. And overall, housing sales were down, but if I look here at the numbers here, they were up for the most part, not up the market, the new home sales. That's what I was looking for. New home sales were up 41.5%. I will also, another highlight is the personal income decreased 0.7%, so pretty steady. I mean, under a point, that's pretty steady. And then after tax, personal income dropped 0.8%. So nothing huge there. There is some, I'm looking here at the numbers, go to unemployment. For the week that ended November 21st, there were 778,000 new claims for unemployment insurance, and that's an increase of about 30,000 from previous week's level. So according to the Department of Labor, the advance rate for the insured unemployment claims was 4.1% for the week that ended November 14th. So a decrease of 0.2 percentage points prior year's rate. So to give you, so what is this versus last year? This year we're at 4.1 unemployment claims. Last year at this time we were at 1.2. So still, we're getting, it's trending better. Still not where it was as of last year. If we're looking at the week ahead, October saw 638,000 new jobs added, and the employment rate dipped to 6.9%. But again, with the COVID uptick, I don't know how steady that's going to be. Again, everybody's expecting a surge. You've got, I believe, California shutting down, New York looking at shutting down, and the schools are shut down. So again, if I would say anything, I would say feel better. Feel cautiously optimistic. Again, I am a big believer, as I always said, in America, and the fact that we're always able to bounce back. And I don't think this is any different. It's just, I think we've gotten spoiled over the last 10 years. Many of you heard me say this, spoiled over the last 10 years, and just expect everything to go up all the time. And that's just not the case. But things are looking better. If you haven't reviewed, I guess my recommendation is this. If you've not reviewed your portfolio, I suggest you do that. If you don't know where your money is invested, I suggest you look at that. And if you haven't spoken with your financial advisor in the past 3 months, you definitely should do that. Just to make sure you're on the right track and you're invested the way that you want to be invested, and you understand. That's the key. You understand what you're invested in. That's pretty critical. Too many times people just, that's where you run into trouble, when you just give a bucket of money to somebody and say, "Oh, I trust you," and not that trust isn't a part of it, but if it were my money, I'd kind of want to know where it was invested so that I could either agree with it or disagree with it, and feel more comfortable and sleep at night. I just can't imagine handing somebody $500,000, $2 million and saying, "Oh, hope for the best, I trust you." There's just too many examples of how that could go bad. I mean, you look at a Johnny Depp scenario, look at a Bernie Madoff. I'm sure many people trusted him. So anyway, I hope this helps. Again, if you're not getting that email, please subscribe me or ask me, and I'll make sure you get the email. And again, it dives down further into details. This was just merely to highlight, in case there's something interesting, you don't have time to read that book report. You want to just kind of get the highlights. There you go. I hope this helps. Take care.